If you're looking for the most up-to-date information on the market and how to trade in these troubling times, then you have found the right place. Welcome to Riz International and our weekly market recap. My name is Chris. I'm part of the Riz Elite team. And if you're not one of our Riz Elite members and you're watching this on YouTube, please make sure you hit that like and subscribe button down below. We'd really appreciate it if you could join the channel and continue to get some of your market updates from us, because we're going to give you an unbiased view of the market as well as we can. Now, obviously, the continued, let's just say situation, obviously in Ukraine is weighing heavily on the market at this point. Now, the 4,200 level that we have been talking about for quite some time has held up pretty strong. On Tuesday, we made a push down below, and everybody thought the market was going to tank. And I will admit, I was one of those people. I thought this was going to be it. I thought we were going to go. And Wednesday came along and up we went. But we are really stuck basically between the 4,300 and the 4,200 level right now on the S&P 500. And I want you to understand that there is continued downside potential for the market right now if hostilities in Ukraine continue. It is going to weigh heavily on the world markets. It also is weighing heavily on my dog that wants to play right now. And, you know, there is definitely more potential downside if, you know, we're being honest about things. Let's find a good color. How about blue? Blue looks pretty good. We're in a clear downtrend right now. The technicals do not look good on the S&P 500. It is, you know, good that, you know, we're seeing this 4,200 level hold, but I think that if things continue in Ukraine, the further that, you know, the Russians advance and the further that things continue to escalate, the worse it's going to be for the market. Also, don't forget that the Fed meeting is coming up here very soon, and we are looking at a 25 basis point hike, otherwise known as 0.25% increase on interest rates. So that is definitely weighing on the market as well. However, I think that's mostly been baked in at this point. I think that, you know, most people are expecting that. If the Fed announces that they're going to continue with their initial plan of going 50 basis points, I think we'll see probably some more downside, in my opinion. But if it is just 25 basis points, I think everybody is expecting that at this point, and that will be pretty well received by the market and accepted at this point. But if we continue to see, you know, the terrible things that are coming out of Ukraine continue, then I think that we can see more downside in the market at this point. It's pretty obvious, you know, the decoupling from Russian oil. You know, President Biden made the announcement that we are going to be discontinuing the purchase of Russian oil here in the United States, and I know that he's encouraging Europe to do the same, and that will have a negative, you know, response or a negative effect on the market because, well, you just cut off about 10% or more of the oil supply that Russia was providing. Now, I'm not suggesting that we should continue purchasing Russian oil, and quite opposite, I wholeheartedly support the decision to stop that. You know, without getting physically involved, this is probably the way to hurt the Russians the most. And you know, I have to applaud the U.S. administration for that, at least taking that. Wish they would have done it sooner, but hey, better late than never. We'll talk about oil in a little bit because obviously that is weighing pretty heavily on the market right now. But what I'm trying to say is hold tight right now. Now is not the time to be jumping in full size on positions, especially long positions. I am also not advocating that you start shorting things either. The market is really watching everything that is going on in Ukraine at this point. Any reference to peace talks or ceasefire, or that, you know, progress is being made in discussions, or the opposite, if progress is not being made in discussions, or, you know, talks break down or things don't go the way that the market intended, will weigh heavily on the direction of the market at this point. So that means that we are taking an incredibly defensive stance right now. And the reason is because this is the time when you can really get your butt handed to you. I mean, you can really take it hard right now if you just start going willy-nilly, taking a bunch of trades and just hoping for the best, basically throwing darts at the dartboard and hoping that you hit something. it's really a time to be a bit more conservative, a bit more tactical, and wait for the opportune moment. And the opportune moment is not right now, unless things change here within the next 24 hours. But we're not expecting that at this point. Taking a look at the breakdown of the S&P 500 right now, the S&P 500 is still down on the year about 12% at this point. So, you know, I showed you that downtrend on the market here. Obviously, you know, we are in a downtrend right now, so market is down. All the indices are down except for energy, and I think everybody knows that energy is up right now. If you've had to fill up your vehicle on anything other than electricity recently, I think you're well aware of the fact of how well energy, otherwise known as oil and other forms of energy, are doing at this moment. Everything else is down. Utilities is hanging right around the zero area, but everything else is down below 7% at this point, with tech being hit the worst, almost negative 18% on the year. And that is pretty substantial. Energy right now, I mean, let's be honest, there's a partial energy crisis. I'm not saying you need to go out and buy energy stocks or anything like that. Quite the contrary. I would not buy something that is up this much. This is extended. I mean, way extended. There's quite a differentiation between where the S&P 500 is and energy stocks are at the moment. So when you have that, it's usually best to just kind of like, okay, we've missed the move on that. Let's chill. Oil obviously been on an absolute flipping tear over the last couple days, and war will do that because you kind of, I was talking with my buddy who was like, oh yeah, we need to do like what the Europeans are doing and go green and blah, blah, blah. Fighter jets don't run on solar power, guys. That's just the truth of the matter. And jets in general don't run on solar panels. They need oil, they need jet fuel, and honestly, the amount of things that petroleum is used for is staggering. So everybody who's saying, let's like, oh, we just got to abandon fossil fuels. Do you like anything that has plastic in it? I sure do. How about artificial heart valves? I've heard those are good. All of these, and there's more, guys. There's a list, and it's a mile long of things that are made from petrochemicals. And, you can't just say, okay, we're not going to use this stuff anymore. It just doesn't work that way. And what you're seeing right now, obviously, is a response to the war in Ukraine. We saw that from the beginning. This huge spike, came back down. We've kind of stabilized here right around $110 per barrel. I think, honestly, if things continue at this point, we could see that move higher. I know that Riz was calling for that. Of course, if the war ends tomorrow and everybody shakes hands and says, okay, my bad, Russia starts paying reparations towards Ukraine and starts helping them rebuild, and, everybody sings Kumbaya around the fire together, we will see oil come down. No doubt in my mind. But until that happens, and I don't think that's happening anytime soon based on the behavior of the Russian president, I think oil is going to be staying right about where it is. I don't think we're going to need to get used to $100 or more oil per barrel at this point. Gold has been on a bit of a tear lately. If you listen to the channels that I do, they say that like gold is going to the moon. Not quite. Okay. Yes, it is a very nice uptrend, and we finally have blown through the channel here on gold. But look at what it's doing. It came up, it rejected off of this 2080 level, and it is sitting basically right here on this support level, right around 1970. We came down, we tested it pretty hard on Friday, bounced right back off of it. So now what was resistance is now support. We'll have to see if it can hold over that, or if people continue getting into gold. Now, of course, people in the past have thought of as gold as a hedge against inflation. Inflation, of course, is also on everybody's mind. That's one of the buzzwords going on right now. And, it really hasn't been behaving that way like it used to. Gold has been a lot more tied with the market, and honestly was really trading sideways for the better part of a year and a half. I mean, all of 2021, it never got out of this channel that I had drawn here. We came down to like 1680, and that was the support level. Even for an entire year, it stayed in this channel. We've now finally broken out of it, and we may see something like this. We may see this breakout like we had in 2020, and then it just comes right back in. Gold has really been not behaving as a hedge at this point, and it's why you've noticed, if you're an elite, that we've not been touching it for the most part. Even though everybody says, oh, you got to buy gold, you got to buy silver, you got to buy all these precious metals, blah, 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 I don't see the data to support that at this point. Anyway, something that other people like to buy into that is an alternative, hedge against inflation, but is actually just kind of following the market at this point, is Bitcoin. Bitcoin does not seem to be able to break over 40,000. We make this huge push, and then the next day it comes right back down. Obviously, there's a lot of talk about cryptocurrency in the market right now in general, in government for that matter. People talking about, looking at digital currencies for, nations and things like that. Not quite sure how I feel about that. But Bitcoin reacts and then it reacts again. So right now, honestly, Bitcoin is trading sideways, really just kind of hanging around this 39,000 area. Yeah, we have these pushes up and they come back down, and that's pretty much it. So, really not a whole lot going on with Bitcoin this week other than, kind of these small moves, though relatively large, but they come right back down. So overall, not too much going on with Bitcoin right now. Now, you'd be like, whoa, Chris, can we push that 69,000 level again? Yeah, we can. We're going to need a catalyst to get there, or a lot of, buying going on. But right now, I think everybody is in just let's wait and see mode. Who's not in wait and see mode is Athena, the dog, who is clapping around in the background right now. She's like, let's go around and see everybody. That's what she wants to do. Sadly, Bitcoin folks are really just kind of waiting and seeing if they're going to have any type of government regulation. Obviously, governments would love to regulate this type of thing, but that's the exact opposite of what Bitcoin was made for. So it's going to be interesting to see how things happen in the cryptocurrency space here over the next couple years, over the next couple weeks, with everything going on, of course, overseas. I don't have any positions to talk about right now, because we haven't taken any. And honestly, we here at Riz Elite, we practice what we preach. I think that's really the underlying message that I want to tell you guys. If we're telling you, like, hey, you need to be patient, let's wait and see, let's find the actual bottom, guess what? We're doing the same thing. We're not just trading willy-nilly for no reason, throwing money around and having you lose it, for the sake of spamming alerts. That's not how we behave here in Riz Elite, because that's not how you make money in the market. That's how you lose money in the market. And we're not in the business of trying to intentionally lose money. Now, I did get a question who was sent to me, and now if you do have questions, please go ahead and type in the chat. Wanted me to take a look at CRWD, which is CrowdStrike. Okay, so Vin says, hey Chris, can't make the webinar. No problem, Vin. Thank you for PMing me your question. And for all of you in Riz Elite who are not here and watching the replay on YouTube or in our Discord channel, please make sure that you PM me your questions every week for webinar if you can't make it live. Said he's wondering if recent earnings and continued growth justifies how expensive this stock is for an entry. Let me see, where are we at right now? We're at 190. Okay. I'm thinking cybersecurity is being propped up in terms of priorities for business because of the Ukraine-Russian conflict, and there seems to be support at 150. Yes, there is absolutely some support here around 150. I know you're referring to this wick right here. I would say more so historical support is probably more around 154, 155, which is pretty nice. Now, as far as the cybersecurity space in general, I think, I think there's a good reason that these are kind of propped up right now. But am I getting in here at 190? No, I'm not. Not post earnings like this with that big jump. Honestly, the time to get in was closer to this 154 area or even 170. And, this earnings spike you could have capitalized on, but there's no way to know that for certain. Let's take a look at their earnings results as reported here by TradingView. Looks like it was a 10% beat, or excuse me, a 10-cent beat, which is about almost a 50% beat, which is spectacular. Well done, CRWD. And looks like revenue is up, also good for them. Glad they're making money right now. As far as cybersecurity in general, I think we're going to see more of an emphasis the longer that this conflict goes on. Of course, Vladimir Putin has been quoted in stating that World War III will be fought with ones and zeros, not with, guns and bullets. And I have to agree with him. I think the cybersecurity space is going to be a growing area. I think there's a lot to it right now, and a lot of demand. And obviously being in a business that's in demand is good for earnings, so I've heard. CRWD doing fantastic. Am I buying in here? No, not the way that it's been behaving, even post earnings. We're still kind of in a downtrend here, to be honest with you. I would say that it's cooled off a bit, but let me draw it. All right. So we were kind of looking at a downtrend like so, approximately. And guys, these lines don't have to be perfect, even though I try and make them perfect. But, you know, the truth is we really can't bust out of this 212 area. Hasn't been able to break out of that. Let's see, is this 205 significant? Not really, maybe a little bit. I can see a couple hits on it, so let's stick it in there just for the sake of putting it in. There we go. About there. And then, honestly, I think this area is more significant. So we're kind of caught between, you know, a couple support levels here for the most part. Obviously, we've pushed up over the 50 moving average, which is good, but we gapped up on earnings. So the question is, can it hold up here? We did not see a continuation on Friday, which is, you know, a little disconcerting. If, you know, the what am I trying to say here? If the feeling, you know, the consensus, there's the word, was that, okay, this is undervalued, then we would see more of a push. But what we've been seeing is a lot of hesitation up here around this 200 area. Now, I'll tell you, whole numbers like this are going to be psychological levels, like 200 on most charts. You're going to see a lot of buying and selling in that area because you have people putting their stop orders and you have people putting their buy orders in there, depending on which direction you're going. And so, you know, we can't hold over it, and that's what's kind of concerning to me. Now, if what we see is some consolidation, right? If we just kind of start, you know, doing this thing, we kind of start doing that a little bit, then that would, you know, be a bit more positive sign for me that maybe this is, you know, it's resisting the sell-off, right? It's holding this area. It means that there's some support there. There's some people who want to keep it there, or they believe that's a good price to get in, where other people it's a good price to sell. Typically, if you can have something hold that area, you'll see a push up. Maybe not that dramatic, by the way, but I did that for effect. And so if it forms a base here, perhaps on this 50 moving average, as the 50 moving average starts to curl over a little bit and flatten out, that would definitely be a positive thing for this. But as far as the space itself, cybersecurity is going to be pretty big here in the future, if you have to ask me. I think especially with things being threatened in the South China Sea, it's only going to become more necessary and more in demand. So, yeah, cybersecurity I think is looking like a very good, you know, potential long-term investment. Would I jump in here? Not really. Like I said, I'm not overly enthused with this move from earnings. Yes, it was a very nice gap up. Let's see how much that gap was. Let's see, and she closed about there. So about a 12% jump, not bad. I will take that. You know, if I were long, I would be pretty happy with that if you were long down here. But the fact that we're not seeing that continuation yet is a little bit disconcerting. Now, you know, kind of looking at the market here, obviously we had a pretty big down day on Friday, and yet, you know, CRWD essentially held. You know, it didn't go up, it didn't go down. This is a doji candle, suggests a bit of indecision in this area. So there's no consensus on what direction this should go right now. As far as valuation, there's a lot more to that than what I can cover in this webinar. But, you know, am I going to say that this is overvalued? I don't think so. I don't think that it's super overvalued at this price. Am I getting in? No, I'd prefer to get in closer to 170 or something like that, or closer to the 50 moving average if the 50 continues to curl out and flatten out a bit. So that is my analysis, Vin. I would say keep an eye on it. If it starts to rip, just let it go. Don't chase it. The worst thing you can do in this type of market is chase something. Because it is so volatile right now. You know, we see these huge swings. These intraday swings are just massive sometimes on the S&P 500, and it makes it incredibly difficult to find a direction. Now, obviously, generally, I would say the direction is down right now. We'll see if that continues, but intraday, there's a lot of volatility, and it makes it really tricky to trade. And so you just kind of have to be a little bit patient, wait for the right moment, and go for it when it happens. Awesome. I see some of you guys typing. If you have questions, you can post them up anytime. I'll get to them when I'm done, you know, monologuing. TTWO for a quick swing. Let's take a look. Matthew wants us to take a look. I'm not too jazzed about it. I mean, do they have anything coming out? I know Riz absolutely loves this studio, and he's a big fan of it, but I don't recall if they have anything coming out that would really kind of be a catalyst to help push them up. As far as a quick swing, this does not look like a fantastic place to get in my opinion. We're kind of on the downtrend here. And going long on this, on a downtrend, is a very risky proposition, especially with everything going on in the market right now. I mean, if you're looking to maybe take it short for a day or two max, I could kind of see that, especially if the market continues to sell off. But taking this thing long right now, I'm not seeing your thesis, and I wouldn't do it personally. I guess if you're thinking that 153 is going to hold, then that's one possibility. But man, look at that red day on Friday. Not exactly confidence inspiring. So if you do, be really flipping careful with this one. I would not swing this one long right now. Could we take a look at LMT? I like the I love the anticipation there, Sujin. That was fantastic. All right, cool. So LMT on an absolute tear. It's a defense stock, guys. It's going to go nuts. Overextended at this point, seems to be kind of curling back towards the downside. I would not short this, nor would I take it long. And you're like, what are you talking about? Because it could go either direction at this point. My inclination right now would be kind of short, biased a little bit because the market is pushing down and because this seems to be rolling over and it's incredibly extended, though we've gotten away from being overbought, which is, good for the RSI, but can it hold here? Absolutely. If we get news that the West is going to get involved or, NATO is going to get involved, this thing's going. All right, it's going to go on a tear. Could you take a speculative position expecting that sort of thing to happen? You could. Would I recommend it? No, I would not. There's too much ambiguity right now with everything going on. It's like we have, a lot of people clamoring for a no-fly zone over Ukraine right now. And I can't say that I don't support them in that. However, I also know what that means. That means that, we will have NATO planes over the skies in Ukraine, and if they are fired upon, they will fire back. And of course, I have no doubt that, Russian anti-aircraft, missiles or things like that would be utilized, and it would basically be an act of war. Putin has said as much, that if NATO does that sort of thing, that he will consider that an act of war, and there will be retaliation, which is not good. Although I support the idea, I understand why it hasn't been done either. Not that I'm happy about it, but I get it. It makes sense. So it's like, how do you know what's going to happen? If we knew what was going to happen, then if you knew something was going to happen tomorrow and the rest of the world was going to get drawn into this, then yeah, taking this thing long right here is going to be an absolute boon to your portfolio, because I can promise you, if any type of action is taken by the West, this thing is going to go. I think it will curl back towards the upside, and we'll see it push over 500 at that point. Obviously, Lockheed Martin has a ridiculous amount of defense contracts with the United States military. I'm very a fan of their Skunk Works division. They always do cool stuff. I can only imagine what they're coming up with nowadays. Do I think it will follow oil stocks with the war? Well, let's take a look. How close is it following oil? Pretty darn close. Let's move those closer together. Yeah, I mean, here's oil right here, for those who are wondering. Yeah, it pretty much is following oil at this point. And I think, again, oil is a reaction to the hostilities in Ukraine. Lockheed Martin is also a response to the hostilities in Ukraine. So I'm not saying that they are linked, but they're both moving the same because of what's going on. So, but that being said, I'm not saying that if this goes to 160, that LMT is going to immediately go up to 5 or something like that. I think they're moving in that way because that's, the sympathy at this point. That's the, the feeling of folks in the market. But, it's one of those things. I could see this coming back down, easily to like 420 or 410. even if oil continues to go up. I would say that yes, they are mirroring each other right now, but I don't know if that's just because of everything going on. If we, like I said, if we kiss and make up, they could all both roll over, or LMT could stay right here where it's at. It could find support in this area. I don't think it would, but it's a possibility. Basically, what I'm trying to say is taking it either direction here is incredibly risky. And you could be stuck in this thing for a while, depending on which direction you take it. So, if you're looking at it for something, more long-term, I think, long-term wise, defense stocks probably have some, more upside if things continue to develop or escalate as they have. That being said, I'm not buying anything this extended, honestly, and the fact that it's rolling over is kind of disconcerting as well. See, a couple people are typing. Is it time to YOLO on some Chinese stocks? No, it is not. We'll take a look at this piece of garbage that you just sent me. $0.10. Oh yes, I've heard of this one before. Are you kidding me? Come on, Matthew, don't give me this garbage. I'll tell you what I think. No, I would not YOLO on this piece of junk. No. Especially with the statements that the CCP has made, with they're setting themselves up, in my opinion, and they're exercising more control over their markets and things of that nature, things that are contrary to what we believe in, which is the free markets. So no, I would not touch anything that has made in China on it, especially if it's in the stock market. Thoughts on Walmart? Walmart is fighting with the 200 moving average right now. That's what it's doing. Looks like dividends are coming up, so that's not insignificant. That's 56 cents a share. I would not shake a stick at that. 136 has always been kind of my area for Walmart that I like it at. Obviously, we're above that right now. However, if we do continue to see issues with supply chain and things like that, which, well, if you look at the numbers, Russia and Ukraine are responsible for 1/4 of the world's wheat production, could cause certain issues in the future. So the way that Walmart has behaved here around the 200 moving average in the past, week, is showing me that it doesn't have enough to push over it right now. I'm going to guess, and this is my guess, Yas, I think Walmart's going to come back. I think we could see it kind of maybe, especially if the market roll back around here around 140, 138, somewhere in that area. I think it would be a better buy in that location. Then, of course, if it makes down to 136, that's my spot. That would be an ideal entry at that point, because there is a lot of buying and selling that happens in that area. So it's definitely some support and resistance there for sure. Here is a bit more of a gamble. It does seem to be pushing up because, listen, people are going to be buying stuff. They need it. Need to get food and things of that nature, especially if we're going to see more disruptions in the supply chain moving forward with the, I've heard there are ships that are stuck in the Black Sea right now because of the conflict, things like that. Those will negatively impact the supply chain on things coming over from overseas. We are in a interconnected global economy that is now attempting to use cancel culture on Russia, for lack of a better term. Listen, guys, I got virgin ears in the room, right? But when I heard that Pornhub, canceled Russia, I knew it was on at that point. Okay, so definitely, cancel culture being used in international politics now. And I just see that, No, I hear you on that one, Yas. Okay, you got out around 139. Still a good exit. Really nice bounce if you got in there and got out. But yeah, it's only $3 per share. It's not a huge win. As long as you got paid, then you're good to go, brother. That's what I'm going to say. But yeah, with continued issues with the supply chain, I'm a little bit concerned for Walmart as a whole, because if they can't get their cheap stuff in, then what do they have? Nothing. So that's what I'm mostly concerned about with Walmart. If we can get back down here to 136, I think that's a really safe, solid entry, especially if it holds in this area like it has, like here, here, and here, and here. These were all spectacular entries if you're getting in on Walmart that you could easily swing it on, and that has always been my spot that I really like Walmart at. But the fact that it can't break over the 200 and continue to hold over it now is definitely something that bothers me. All of the things going on with the conflict, and I know I feel like a broken record saying this, guys, but this is what's pushing the market right now. That is all that anybody's looking at. That's all that anybody's watching on the television. They don't care about, what problems there are with a certain virus that was going around. And listen, I know the YouTube overlords listen to us, so I can't say the name, but I'm sure you know what I'm talking about. The sickness, the plague that came upon us, that has magically disappeared, and everybody is looking in Eastern Europe right now. So, I think that is the thing that drives the market, really is. Dude, that's awesome, Yas. Congratulations. No, I'm glad you're having good success with it. I love it. I mean, as a stock, I think it's a very nice stock to swing trade because it's not as volatile as other things like, let's say, Tesla or something like that can be ridiculous swings one way or another. And Walmart gives you a bit smoother price action, in my opinion. It's the #1 retail store in the United States, the #1 brick and mortar retail store. And it's not going anywhere. And plus, they pay dividends, which are always nice. I like free money, especially when Walmart gives it to me. And I don't even have to go and do self-checkout when I do it at the stock market, which is kind of nice too. So, yeah, I definitely agree with you. I like Walmart as well as a company. I don't necessarily like where they get most of their stuff, but you know what? We're in the stock market. Yeah, it's just another ticker. All right, cool. MU, Micron, another personal favorite here on, at Riz International. Micron getting freaking hammered right now, along with a lot of other tech stocks. You're seeing this with AMD. You're seeing it with Facebook, or excuse me, Meta. Got to use the cool name, Meta. It's ridiculous. MU getting absolutely smashed right now. Looks like earnings are coming up here in the end of March. So about 17 days, we'll have earnings on that. I'm not buying in now. I'll tell you right now, right on that. I do love this company. I would totally get in on this, but yeah, this is not the point to buy. I would wait until it's kind of cools off a little bit because we're in a massive selling move right now on Micron. And I think this is going to have to do with the superconductor shortage, or semiconductor, excuse me. Semis have been... There have been problems with supply chain. You want to talk about supply chain issues. The semiconductors are probably at the top of the list. And of course, with all of the tension in the South China Sea and Taiwan and things like that, the #1 chip maker in the world, kind of in the crosshairs of the CCP at this point, I think that I would be very careful with stocks like these. Let's see how that pans out, especially when we get a bit closer to earnings. But I'm not going long on this until this selling pressure cools off. I think it's moving down with the market, obviously, but also there's the added pressure, the fact that it's hard to get chips right now, and that's kind of a problem. So, all right, awesome. Wonderful questions this evening. Thank you, everybody, for coming out. I really appreciate it. It was great having all of you. It's always awesome to have everyone. Of course, you're welcome. Thank you guys for coming out and doing this. This is, in my opinion, one of the bigger benefits of elite membership. Of course, you get to interact with Riz and you get his stuff, but I think hearing it, spoken and getting somebody else's view on things can definitely give you a bit of confidence for what you're looking for, and maybe an idea you have, and we can talk about it. I can give you my opinion. Of course, it's just an opinion. I'm not telling you what to do with your money, but I'm going to do my best to help you be as successful as possible as a trader. So thank you guys for coming out. I really appreciate it. And we will see you in Discord on Monday. Good night, everybody.